Everybody, welcome back to the Market Interest, where we talk stocks, finance, and the market. Gas prices are just at an unprecedented level right now, and I don't know a single person that's in love with filling up their tank or driving really far. Anytime going out with friends right now, we're all debating, who should be driving. So it's really a hassle. Everybody knows that this is just a frustrating time, and gas prices are through the roof. But, there's also this narrative that energy companies and all these oil companies are the ones that are price gouging everybody. And undoubtedly, like without a doubt, there are definitely some companies out there that are price gouging people. If you're in the middle of town and you see that gas is $6 a gallon and you drive to the outskirts and all of a sudden it's $8, $9 a gallon, more than likely that company's probably, price gouging. I would assume so. It's a really big difference in price. But to have that big energy companies, like Exxon Mobil or Chevron, how can we really determine that they're the ones that are price gouging? Is it because they're making a little bit more of a profit? So what I want to do today is dive through some of the fundamentals of a company to determine how can we tell if this company is actually price gouging us or not. Most of the US right now has experienced a really hot real estate market, right? And it's all based on supply and demand, just like the oil and energy sector. Just because you're selling a house and there's not much inventory out there for people to buy it, more than likely you're going to get offered a pretty good price for your house. It's not your fault. It's something that just happens inherently. There isn't much supply to meet the demand in the market. And so prices naturally just start to rise. And it's very similar with energy. So it's a really tricky market to nail down every factor, but that's clearly one of them. So let's dive in deep and start looking at Exxon Mobil to begin with. Exxon Mobil, one of the world's largest publicly traded energy providers and chemical manufacturers, develops and applies next-generation technologies to help safely and responsibly meet the world's growing needs for energy and high-quality chemical products. You see, their year-to-date return is 34%, close enough. And, right off the bat, people are probably thinking, well, wow, that's a huge return. But that's based on their market price, right? So people are actually buying into their shares, and the value goes up the more people to buy in. The key factor here is really their profitability measure. We want to start with their gross profit margin. That's really key to start off. So their gross profit margin is just over 32%. Now, having a gross profit margin of 32% sounds like a lot. And what most people are probably thinking, wow, that's a huge percentage that they're taking. For every dollar you're paying them, they're taking 32% as a profit. And that's kind of true, but not exactly. A quick refresher on some accounting course here, guys. They have their revenue, all the money that's coming in, minus their cost of goods sold. And then what's left over is their gross profit their gross profit. Now, we want to get to the bottom line. The bottom line, all right, their net income margin, that's really the dollar amount that's left over profit that's for shareholders, right? But in between, there's a lot of expenses that happen. There's a ton of expenses that happen. So they have their marketing, general and administrative, depreciation, amortization, interest. They have to pay taxes, obviously. And then what's left over is their net income. You got to think about this industry in particular. It costs a lot of money to drill, to get the equipment, to hire people, to train them. They have to follow certain guidelines. So there's a lot of different factors involved here in order to run a solid business. So that's just a quick refresher. So we're looking at the top line here, the gross profit margin. For a 5-year history, you can see that their gross profit margin doesn't change all that much. They've had a couple little blips here and there, goes down a little bit, but they stay pretty consistent with their gross profit margin, right around like 32%. The more important piece is the bottom line. We want to get to that net income margin. So let's take a peek at that. And we see that that's where the company fluctuates a lot, right? It's going to fluctuate a lot, and a lot of companies do. They really do. They try and have a consistent net income margin, but things happen, COVID, other scenarios that you don't expect. Their depreciation of their assets. It's all about their accounting, how they're measuring things, and what other investments they need to make into their business that will then leave them money after the fact at the end of the day. I would assume their average is going to be somewhere around this 5% mark. Seems like that's kind of where it lands on average. Now, keep in mind, once that money is actually made, there's a profit, net income profit, then that money can be distributed to all the shareholders. So if you own their stock, then you would be getting a piece of that profit. If they pay a dividend, then you'd be receiving it in a dividend. If they don't pay a dividend, then more than likely they're reinvesting it back into their business so that they can make a larger profit, and you're just receiving a higher and higher share price over time. So either way, the shareholders, whoever owns the company, whoever owns the stock, or the index, they're the ones that are profiting, right? Kind of makes sense. Now, the same thing can be said for Chevron. So let's take a peek at Chevron. Chevron Corporation is an American multinational energy corporation and active in more than 180 countries. Chevron is engaged in every aspect of the oil, natural gas industries, including hydrocarbon exploration and production, refining, marketing and transport, chemicals manufacturing, and sales. We see that their 1 year return is 55%. Let's see their year-to-date return. That's really great, actually. 43% year-to-date return. Again, really, people have been traveling over to the energy sector. Can't blame them. But let's take a peek at their profitability as well. All right, and let's actually line them up. All right, now you can see that Chevron in the pinkish purplish, their gross profit margin, so top of the line here, guys, top line, or higher up there, in like the 40 to 45% range. Sounds like a massive, really like a massive gross profit margin. But now we have to think, what are they actually using that gross profit for, right? They've already covered their cost of goods sold, but now they have all the operations in their business. They have to hire new people, train new people, make sure they're staying within the safety lines, pay for permitting, run their business, buy new equipment, depreciate that. So there's a lot of different factors happening between when they're making the gross profit and what happens at the bottom line. So let's see what they're actually making in terms of their net income margin. They fluctuate a little bit too. A lot of different factors involved in this business. Exxon's a bit of a little bit larger company. They probably have some more cash reserves just in case and can kind of handle some of the fluctuations, I'm assuming, or might have some better controls on their on the supply chain, their operations, etc. So unfortunately, we can't get the most recent quarter, what we're in right now, right? We know that the prices really, skyrocketed just within the last couple weeks, that's for sure. And here's some of the reasons. Obviously, the war between Russia and Ukraine. Russia is a major supplier of energy to the world, and the U.S. gets a portion of their energy from Russia as well. And now with us cutting off ties to Russia, we're searching for other areas to get that energy. So supply and demand. There's a really big demand right now, but there isn't as much of a supply available right at this second. It's going to take some time for companies to produce this. I would want to ask, how have these companies done in the past when oil prices have gone up? And that was about 2008 period is really when we saw those companies really raise their prices. And you can see that the net income margin really didn't change that much. It stayed right about the same. It's pretty consistent with their average. I don't believe that the companies are price gouging. That's, just my opinion. I don't think that's the case. Or at least I haven't seen any data to say otherwise. So I haven't seen any other reason to say otherwise at this point in time. We won't know until their next quarterly report. Hey, how have their margins come out? Is their gross margin really high compared to normal? Is their net income margin, what they're profiting, higher than normal? The thing is, they can, if they're running an efficient business or doing really well, managing their business, then they can improve those margins either way. But the fact that I don't see, some of their margins just popping out saying, yep, we're making a lot more money right now, I just don't see it at this point in time. What I really see happening are companies being more efficient with their operations, with their companies. They're adapting to the market. And again, trying to control supply and demand, it's really difficult, guys. You got to think, energy has kind of been poo-pooed for, quite a while. And we all need it. That's the thing, is we all need it right now. And, obviously, we want healthy things for the environment. We want to make sure, we're taking care of the planet and, but also taking care of each other at the same time. I think we're all noticing that it's pretty impossible for us to just change where we're getting our energy overnight. This is something that's going to take time, and we're working on it. Clearly this is, even these companies are working on it as well. The fact of the matter is there's going to be a bigger demand for energy, especially for these companies to start employing more people, drilling more, getting more product out, and really producing all this product. The thing is, that doesn't happen overnight. And they need to hire people, train people, and bring them on board. They need new equipment. They need to purchase things. So when you start to see even some gross profit, or see some of their profit margins increase for a short period of time, it's not going to stay that way if they are constantly adding new people, adding new equipment, adding new expenses onto their income statement. So with all that said, guys, I'd say, just as a quick recap, I think it's going to be pretty hard to determine if any of these companies are price gouging at the point in time. It doesn't seem like they are right now. None of their margins are like drastically out of hand, or out of their consistent, out of their average of where they were before. So it doesn't seem like they are. We won't know until their next quarterly report, though. Guys, think about it. We have inflation going on right now that's just going through the roof. So that's going to have a major effect. We have a war between Russia and Ukraine, and Russia, a major supplier of oil. That's going to be another tough factor. We're searching for new energy in other countries. That's another factor. Supply and demand. There's a lot of factors here. And then COVID's done now, guys. People are getting out. They want to move. They want to do things. They want to travel more. And so there's going to be a higher demand for all the oil. So there's so many different factors involved with this. To just think that a company is, taking advantage of a situation, I think it's really hard to tell. But we'll be able to dive deeper into the numbers in their next quarterly report and see, are they able to make a larger profit from making some other efficiencies within the company, or are they just charging more for their product and that's it? I'd say if anybody thinks that these companies are just doing really well, they're extremely profitable right now, and they're just making so much money, I would highly encourage you to consider purchasing their stock. That's why people invest. You put your money somewhere because that company makes money, and it will bring that return to you. That's the whole point of investing. And so, everybody does this for their retirement. With anybody who's getting a pension, those pension companies are investing in companies like this. Other people with your 401ks or 457s, 403bs, you're putting your money into mutual funds who are investing in companies like this in order to make a profit. So that's the whole concept. The more that you take advantage of companies that you think are going to be profitable, the higher the probability is that you're going to make more money as well. That's the whole point of investing, and that's how our system works. So I really strongly encourage you guys to take advantage of it. If you really think that this is an appropriate stock for you, do some research, do your due diligence. Feel free to call me. I've got a link in the description down below. You can reach out. We can have a one-on-one conversation and find out, is this an appropriate stock, or are either of these stocks appropriate for you? Is the energy sector good for you? Or are there some other tools that you can use to make a better return, or have a safer retirement? So thank you again, guys. I look forward to our next conversation. Don't forget to like, share, and subscribe. Join us on Facebook at The Market Interest. We can join in the conversation there. Unfortunately, we have comments disabled on YouTube due to compliance purposes, but feel free to join us on Facebook. All right, I will see you guys next week. Take care.